Hi traders, welcome back to the currency strength and weakness trading ideas video for the 12th to the 16th of August. Very interesting situation with the currency strength and weakness at the moment. Obviously last week we had the potential for sort of market crashes and things like that, so it would have thrown out some of the currency strength and weakness a little bit. So coming back to it this week and to see if there's any kind of significant changes for us. Now let me know in the comments, what is your trading routine? Do you have a good trading routine? Let me know. If not, I've got a video coming up for you. So let's take a look at the currency strength meter then. What is going on? What is it telling us at the moment? Well, there's been some substantial changes to this, including the Great British Pound, which is one of the weaker currencies at the moment, is the orange line in that -5 territory, which is a reversal, but is still very weak. Typically, if I'm looking for a reversal, I want to see this start to point back to the upside. So although I've listed it on the reversal panel, I like the idea of still looking for shorts on the pound alongside the US dollar, which is also on the bearish side of things. But you can see that we've actually got a slight increase to the commodity currencies. That wasn't happening last week. So Aussie, Kiwi and CAD have been fairly positive. CAD is definitely one we've been looking to buy. If you've watched all the previous videos and live streams recently, CAD has been definitely one for us to focus on, and I still feel like there's still good potential in CAD. Just need to maybe wait for some good positioning on that now. But New Zealand coming in from a reversal zone, which is this sort of gold color here. You can see we're in that reversal zone, starting to press on a little bit now. So are we going to see a bit of a comeback for Kiwi and Aussie? And are we looking for a little bit of downside to our haven currencies, which is the Swiss franc and the Japanese yen, being in those reversal zones? So let's take a look at the heat map. A lot of changes on the heat map. I've actually only managed to find one currency pair which has met kind of every criteria that I look at in terms of a heat map, which is dollar CAD to the downside, and a lot of oranges. Now the oranges is preparation for me. It means that I can have a look at these currencies but maybe trade them at a slightly lower risk. Why? Because they're all kind of usually point to sort of reversal situations within the market. So like I've mentioned before, we're starting to see the commodity currencies do pretty well again. So that's Kiwi, Aussie, CAD. So you can see here, for instance, CAD Swiss, CAD Yen long potentials, Kiwi Swiss, Kiwi Yen potentials. And Kiwi is the one I'm really focusing on because it is showing us that there is a good move potentially forming in terms of reversal. On the other hand, we still have dollar CAD in focus. We talked about shorts around about 139s. Market has come down to the 137s. Still like the idea of 136s on dollar CAD. This is a daily chart. You can see that the momentum has slowed here, so I wouldn't be surprised if we saw some kind of pullback, perhaps into the 137.80s before seeing a continuation. Otherwise, I'll be looking for kind of breakout patterns in terms of this consolidation. Do we get like a punch back up, rejection, break, and a move towards the downside here for US dollar CAD? Now, I'm going to focus a little bit on the Japanese yen at the moment, and we're going to take a look at dollar yen first, and then we're going to have a look at Kiwi yen. And dollar yen, although we've had this very aggressive downward trend, we've broken through many key levels, including sort of 152. We found support at 142. The market started to pull back, and you can see we've had this slight upward trend develop on the 4-hour time frame. So this is a 4-hour chart. And what I've noticed is we're getting bullish patterns across pretty much all the yen pairs. And that is this triangle pattern here. We've got an ascending triangle where the market is making higher lows and we've formed a resistance. Now, if price breaks this, then it could be an opportunity for dollar yen to trade higher back towards 152. Now, the only way I think we're going to see that is if the volatility continues to fall. So what you need to keep a look on is your VIX index, the volatility index within the market. If the volatility continues to fall, then dollar yen prices should trade higher essentially. So I'm looking for that potential play. If I'm wrong and we see volatility continue and grow again, then a break to the downside could be an opportunity for those looking to buy the Japanese yen. That brings me on to Kiwi yen. Very similar patterns being set up at the moment. We've had a very nice rally in this, and look what's happened again. Market has formed a resistance around about this 88.90 handle, and we've got higher lows. So I feel like a breakout of this could influence a little bit of buying pressure on Kiwi yen. So that's all I've got for you on the currency strength and weakness charts this week. I hope you enjoyed this video. If you did, please leave it a thumbs up. Subscribe if you are new, and I'll speak to you soon.